Time changes everything, and that is no different to stocks and ETFs. So in today's video, with it being a new year, I wanted to talk about the S&P 500 ETF in 2021. The S&P 500 is tracked on many different exchanges, but for the purpose of this video, we're going to use the ticker symbol VUSA as it's the most popular one on Trading 212. If we jump over to my account, we can see that we currently have 9.5 shares in the VUSA Vanguard S&P 500 ETF. We're up 12.75% over the past 2 or 3 months, which isn't bad. Another one of my main ETFs that I hold is the Vanguard FTSE 100 GBP. We're currently up nearly 20% in that. So again, I am quite happy with returns on both the Vanguard S&P 500 and the FTSE 100. Firstly, just a brief overview. The S&P 500 currently has 505 companies, and this S&P 500 in particular is currently worth £52.72 with an ongoing charge of 0.07%. We can see down below that the top two objectives of this ETF are firstly to track the performance of the Standard & Poor's 500 by investing in all constituent securities of the index, and secondly to remain fully invested except in extraordinary market, political or similar conditions. In terms of investing, the S&P 500 has been known as one of the more diversified ETFs you can hold. As I said, it currently has 505 companies, so it's brilliant first of all if you want to have a low risk, but again there isn't a lot of reward either in terms of potential growth, but it is definitely safe over the long term. Since last July it was about £48 a share, and you can see then it progressively went down to about 48 again over the space of 2 or 3 months, but it's after going up to about £52.70 over the last week or so, so that's quite impressive considering what has been happening in the market overall. In terms of characteristics, we can see again it has 505 companies, and you can see, for example, their median market cap, price earnings ratio, earnings on growth, etc. on the screen already. But what we're kind of more focused on here is in terms of diversification. We can see that 100% of this ETF is situated in North America. And if you go down further, again, no surprises, all in the US, as this top 500 companies in the US is what this ETF tracks. We can see their weighted exposure down below. It's no surprise that IT is the top sector in this ETF with 27.6%. We have the legs of healthcare, consumer discretionary, and consumer services leading up to top 3 or 4 sectors in this overall ETF. With the IT sector making up nearly 30% of this overall ETF, it's no surprise that the top 10 or so constituents are mainly in the IT sector. Their top holding with 6.36% is Apple. They then have the likes of Microsoft, Amazon, Facebook, Google Class C and A, Berkshire Hathaway Class B, J&J, JP Morgan Chase and Visa making up the top holdings in this ETF. One of the main benefits of holding any ETF is obviously diversification, and the S&P 500 is definitely probably the most diversified ETF you can come across, which also has many benefits and it also has drawbacks. Some of the benefits is that overall it tracks the overall market, so even if the market goes up, this will go up, and if it goes down, it will go down effectively the same way. But over the long term, we can even see here from the max chart on Yahoo Finance, it has always went in an upward trajectory over the long term. So definitely time is definitely key in holding an ETF such as the S&P 500, and over the long term you can make quite a lot of money. However, you can also look at this diversification as a drawback as well. There is not much point, in my own personal opinion, to be investing firstly all of your capital into an S&P 500 ETF if you only have, let's say, a few hundred or a few thousand euro, pounds or sterling, whatever currency you use. I believe the S&P 500 is really only effective when you have over 100 grand, in my own opinion. And again, everyone will have different figures, but I believe if you're kind of coming close to retirement, that the S&P 500 would be an ideal place to actually put your capital. But if you're in your late teens or early 20s or even 30s for that matter, I do feel that you should only have about 5 to 10% max of your overall capital in the S&P 500, as I believe you need to take a bit more risk in terms of risk reward ratio. You won't be making a whole lot if you only have a small amount of capital, but definitely it is worth holding 5 to 10%, in my own opinion, of your overall capital into an ETF such as the S&P 500. On the corporatefinanceInstitute.com page, they made 2 good advantages and two good points or disadvantages when holding the S&P 500. The advantage was that it was a passive management, so obviously, as you're aware, you don't have to individually invest into 500 different companies as it's passively managed, so you don't have to do any of that kind of work. Also, it's kind of a no-brainer as well that it's fully diversified across all sectors across the US market, but that can also lead to disadvantages. For example, ambiguity about the divisor, and it has a narrow focus, so even though one of the advantages above says it's fully diversified, it is only diversified across the US market, albeit even though the US market is the main market in the world, it doesn't really include the European markets, for example. So that's why in my own investing, I also hold such ETFs as the FTSE 100, which tracks the top 100 companies in the UK. And you could even go as far as going to the more underdeveloped markets across the world. You could go into your own home market. That would be the Irish market in my case. There's definitely a lot more room for diversification, but in terms of the US market, the S&P 500 really does have it all. Probably the most talked about addition to the S&P 500 since my last updated video on this ETF was the addition of Tesla. So we can see back in December that Tesla was now added to the S&P 500 and the index will never be the same as the heading goes. So the Tesla stock is now in the S&P 500. The electric vehicle pioneer goes in as the most valuable company as well as the largest weighting ever to be added to this index. As I stated at the beginning of this video, it's kind of not worthwhile in my own opinion if you're only starting off with a few €100 in this ETF as your only investment. But when you get larger sums of money, this compounding effect over even a 10-year span, if you're getting 10% a year, which is about on average what your S&P will generate for your current capital every single year, you can see that if you invested €100,000, and again, I know the majority of people wouldn't have that at their disposal to invest, but let's say you did get this sum of money through more risky, and I wouldn't say more risky investing as such, I mean kind of not into ETF funds, even into more like your electric vehicle sector, etc., where your profits could be a lot higher than 10% a year. So when you actually eventually got up to the 100,000 mark, you can see at 10% a year, over a 10-year period, you'd be up to nearly 260,000. That's 160,000 profit, and nearly double or triple of what you actually invested originally. So you originally invested 100 grand and you nearly are up to 260 grand after 10 years. Again, I know it's 10 years, but that's 160,000 euro over the space of 10 years, which is about 16,000 a year, which is extremely impressive. So there you have it, guys. I just wanted to give a quick update in regards to S&P 500 and in particular ticker symbol VUSA as we go into 2021. If you found this video anyway helpful or entertaining, it would be brilliant if you consider liking the video, as it would help more people reach the video. It would be also brilliant if you're new around here to consider subscribing to the channel, as we're only 3 subs away from our next goal of 600. And finally, the most important part will be to comment below if you have any questions, queries or suggestions in anything investment related, and in particular the S&P 500. Thanks very much, guys, and I'll see y'all in tomorrow's video.